It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, January 12th, 2016. Cruising our way through here this second full week of the month of January 2016. Hope you're having a great week with us. Boy, oh boy, did we nail last night's newsletter. But as you guys know, all the success we had today, we're only as good as our last trade, so let's get ready for another important session tomorrow. I've got a plan here on this newsletter Monday through Thursday evening, just before 8 o'clock Eastern Time. I've got a plan for oil, E-mini S&P, gold, and the euro. Starting off with the crude oil, starting off with the black gold. Tomorrow is inventories on the oil market. Don't forget, we're going to plan for that. We'll talk about that in a moment. Crude oil is bearish and rotating higher, right? A little bit of a peppiness in its step. We got some news coming out this evening. Crude is bearish but rotating higher now off the lows of a major bear channel. This tells us to look for selling opportunities after the bulls retest the highs of the channel. We got to stay patient right now if you're a bear. It's been easy money this week so far, but tomorrow we're probably going to stay patient for those bulls to get it out of their system here ahead of that news tomorrow. Got a good chart and a good plan for the oil traders tomorrow in and around that news. How about the S&P? The S&P 500 is bullish as it staggers. Yeah, that's the word I would definitely use to describe it, as it staggers higher. And we have a rotational target higher up at the top of the channel highs, which tells us to look for opportunities to buy pullbacks as well as look for seller failures along the way. Got a pretty interesting chart on the S&P. S&P's got the chart of the day today. We'll take a look at that in a moment. On the gold, the yellow metal is bearish this evening and rotating off the highs of a bear channel. Perfect opportunity to be a seller right now in gold. This tells us to keep selling retracements and keep looking for buyers to fail as they try to buy pullbacks off this high. We get a target down at 1078 on gold for tomorrow. Later on this week, we'll take a look at that chart in a moment. Nice easy charts on gold and euro, finally, right? They've been pretty chaotic here so far. Speaking of the euro is bearish. Talking about the 6E, the euro currency futures. Euro is bearish and rotating lower off the highs of a major bear channel, but we expect to see buyers try to hold this pullback, which means a failure would be an easy selling opportunity. We get 3 pushes down on the euro. We're expecting to see the buyers at least try as they trade low volume after that tick change on the euro. We got a plan for oil, S&P 500, gold, and the euro. Before we jump into today's charts and get you some strategies for tomorrow, I do want to remind you guys to make sure you're watching this video on our trading blog at Sideways Markets. If you're on our YouTube channel right now, there's a link in the description of the YouTube video. That'll take you over here to our trading blog. Couple reasons why. First of all, upper left-hand corner, I would love to invite you to come join me in my trade room as a guest for a day, maybe 2, maybe 3 days. Grab your free pass in the upper left-hand corner. In the lower left-hand corner, you can register for your nightly newsletter mailing list. Now you'll never have to worry about missing another newsletter video ever again. All I need is your name, a real email address, and then check your inbox. I'm going to send you a verification email to make sure you give me approval for that. And then, of course, below the video tonight, how nice is this? Now you can download all the charts you'll see me using in tonight's video. You can download those charts by following that link right below tonight's video on our trading blog. And then, of course, over on the right-hand side, you can register as a trial member, not to be confused with your free pass. It is a much more detailed membership to our trial membership. You can learn more about what it means to be a member, and don't forget, we've always got someone standing by 24/7, 365 to answer all your important questions. No question too big or too small. Give us a contact on the right-hand side, and we'll help answer any questions you may have about trial, newsletter, membership, whatever the case may be. And, of course, starting off here, looking at news for tomorrow, Wednesday, January 13th. Let's take a look here for the news. We have 10:30 a.m. tomorrow morning. We get the petroleum status report. 2 p.m. Eastern time, we get the beige book, and they're going to toss in the Treasury budget just for kicks right on top of it. Really, the most important number for oil traders tomorrow is going to be that inventory report tomorrow. We'll talk about that in just a moment. We're going to be trading around that. And then you get some late afternoon news tomorrow, 2 o'clock, right? Just in case you're wondering, I always get into my trades in the morning session. I usually don't add to new positions in the afternoon session, right? Try to get into my positions early in the day. As you get later in the day, volume drops, more gambling becomes involved. I focus my day trading on that overlap on London and the U.S., right? So between 7 a.m. and 11:30 a.m. Eastern Standard Time. Then, of course, we'll hold positions open for the rest of the day. And then, of course, our swing trading stuff, you'll be always entering into that stuff. Guys, again, come out and join me. I'll gladly teach you all the stuff that we do here at School of Trade. Most important, though, 10:30 tomorrow morning, that's going to be your big news event. It's really only applies to those crude traders tomorrow. So everybody else, you get a pretty much wide open session tomorrow, which means who the hell knows? We'll hear from the news media tomorrow morning. We'll see what the charts do the talking for us. Starting off here with the oil, we did talk about that just briefly before. We do have a news alert for tomorrow. Every Wednesday, as long as Monday is not a holiday, every Wednesday morning, 10:30 a.m. Eastern Time, we get the inventory report, right, the DOE. Don't forget, every Tuesday evening, we get the more accurate number, 4:30 p.m. Eastern Time, right? That's going to be the American Petroleum Institute. That's going to be their report. Usually that API number every Tuesday night at 4:30, which of course is why this thing spiked up like this, right? Usually that number at 4:30 on Tuesdays is the more accurate of the two, in case you're curious. Tomorrow's number, the DOE number, really has very little accuracy. It's really just you got to trade around it. Most important thing for crude traders tomorrow, we're sitting on hands from 10:15 to 10:45. A lot of crude traders won't even touch this thing between 10 o'clock and 10:45, so use your best judgment. The most important thing to remember about all news events is that although they may look very enticing, it's very difficult to profit from them consistently and to do it, of course, without too much risk. The volatility is great during news, right? That's usually what gets new traders in trouble because the volatility is great, but what is not so great is the liquidity. Your stop losses are not going to hold, right? If you don't know what I'm talking about, that is your big heads up that you need to get education on why you should not be trading news. I do a very, very detailed chapter in our beginner's course on not only how to trade around the news, but all the different news events that you really need to be focused on. Daily events, weekly events, monthly events, quarterly events, and yearly events, right? Like the FOMC semi-monthly event, right? So make sure you guys are aware of that for news tomorrow. Now, looking at the chart here, as you can see, this is a pretty, it feels like I should do more with this, right? There's not a lot on this chart right now. We're usually seeing a lot more analysis on these charts, but there's really not much here. You know, I looked at this chart initially and I said, okay, well, you know, it's got to be a spike in channel, but well, if it's a spike in channel, we already broke and retested there, so that spike in channel is probably not it, right? We line up the lows. We have an untested high. Right now, if you hang out in our chat room, you'll probably see Mr. John Henry looking for those what we call the first test of a channel, right? So bottom line is we got the lows. Line up those lows, we really don't have a very, proven channel high. So, right now there's a lot to be said. We know who's in charge, right? Crude oil is definitely bearish. We're definitely rotating higher right now off the lows of this major bear channel, which tells us to stay patient, look for selling opportunities up around the highs of the channel, right? So we talked about this last night. Channel rotation, go from the low up to the high, down to that low. Where we going next? Well, going to go up to that high. That's why I said at the beginning, crude traders, you really got to be patient if you're going to be a seller right now. If they hold this pullback, this is a good example. If they hold this pullback, that's going to become the ABCD on the way up. If you're a buyer right now on crude, your best bet in this very strong, obviously bearish market we're in right now is to look for sellers to get caught on the wrong side of this market, right? So if you want to be a buyer, the easiest money you're going to make here is not buying this pullback. Wait for the pullback to hold. That gives you proof. And then you're going to have sellers on a much faster time frame who are going to see this as a chance to sell a retracement, right? Look for their stops to be run just above that high, and that will give you a chance here now to get long as it pushes higher. So if you're a buyer right now, definitely need to see some proof. You're probably going to get it, right? They'll hold that moving average in the pullback. There's your proof. And then again, I would imagine sellers who are unaware of this proof are going to try to sell into that, right? They're going to sell that. And they might be successful, probably not. And when they're not, you want to be buying into that if you're a bull. That'll be your best opportunity right now. You got to get to it fast, though. If you're a bull right now, time is not on your side, because once we get up around the highs of this channel, now all of those patient sellers are going to be here trying to get that price right back down. The one big variable tomorrow is we have to trade around that news event. And, really, that reminds me, whenever we have a major news event, if this market turns into a freight train, do not trade against the direction of that freight train, right? I don't want to hear anybody stepping in front of us of a long here, right? We have what appears to be a bullish number for tomorrow. So if this thing is cooking higher here, you've got to be patient. Don't blindly sell that high. What I'll be looking for tomorrow is I'll be looking for them to make that measured correction higher, and then we go into basically failure mode, right? We don't have the opportunity to take continuations at that point, so all we're looking for now is a chance for the buyers to fail so we can sell into their failure. In all reality, guys, this price could go as high as retesting that 32.20, right? I mean, look at the move we saw earlier this morning, and then it collapsed right back down in. So do not be surprised ahead of this news. Again, if you're a buyer, get to it early, right? Buying pullbacks, more importantly in this bearish market, buying into seller failure, right? As it goes lower here, right? Buying into that seller failure on the way back up. Once we get up around these highs, though, you got to stop buying those highs and really start looking for sellers here to get caught to be a buyer up around those highs. I'll be looking for buyers to fail, to sell the high. If it keeps going higher, again, 32.20, look for that pullback now to fail, right? I have a major resistance target that's still hanging out, untested, up at 33.16. Boy, I don't think we're going to go to 33.16, but I'm not going to tell you what will or what won't happen tomorrow. I'm going to let the candlesticks tell me. Don't forget, trade around that news tomorrow, 10:15 to 10:45. Don't step in front of any freight trains. As we get up to those highs, we're looking for buyer failure. And then, of course, if we can get the buyers to fail at the highs, right, then it's just selling those retracements right back down to finish up a pending measured move, right? The measured move, we don't really know where it will be yet, but we do know that we'll be looking for that if it can give us a chance to get short right back down, right, tomorrow. Most likely after the news. What typically happens is you see that measured correction up into that high. It'll feel like it's never going to stop. And then, 10:30, 10:45 comes around. After the news comes out, it starts to struggle, and, right, that's when you start to see it. Right, you take a nosedive back down. Don't forget, we'll be trading that crude market tomorrow morning live in real time. Do not do it on your own. How about some S&P? Now, boy, not that I know what this feels like, of course, but the S&P feels like it's kind of stumbling out of a bar at 2 o'clock in the morning right now. It's kind of staggering higher, right? Again, not that I would have any, right? I mean, I'm getting up at 2 o'clock in the morning to go run a marathon and then go practice my violin and, anyways. Having fun with you guys here. S&P is definitely bullish, right? S&P is definitely bullish here tonight. Here's something that I kind of, looking at the chart right now, you can see it's a pretty ugly chart. There's definitely a bull channel on it. There's definitely kind of a, the range looks good, right? The range is holding at these lows, but you'll notice though, with the exception of that high, we're not really doing a very good job at respecting that high. That, I almost removed the range completely. I really did. I almost removed that range completely. It definitely has more of a bullish channel feeling than a trading range, just because we're not respecting the highs, right? It's almost as if the highs aren't even there right now every time it goes higher. So I'm definitely, again, I'm discounting the importance of a range, but I can still see the lows are holding, so I'm going to leave it on there because that low is definitely going to be a failure target back around 1900. For whatever reason, maybe it's a big round number, I don't know, I really don't care, but we have evidence that buyers are defending that low. It happens to be a 1900, but it's not always going to be like that. It's not always a big round number, right? Big round numbers are not always going to react like that. Okay, especially not that big round number, right? Give me the 2000, then we'll talk. But 1900, it's a coincidence at this point. So bottom line here is we're holding those lows. We keep making higher highs. It's screaming bullish. But here's something I want to bring to your attention that I just kind of caught out of the corner of my eye. Right now, the bulls are taking the escalator up, and the bears are taking the stairs down. I love to do little kind of practice sessions like this with our students in the trade room, right? Look at the candlesticks. Every time the market goes higher, big, strong green candles. Look, every time it goes higher, right? Big, strong green candles. Now look at the opposite direction. Every time it goes lower, right? It kind of herky-jerky, right? Goes lower, right? Tries to go lower, kind of stumbles its way lower, stumbles way lower. So the way that I describe it is the bulls are taking the expressway higher, right? Taking the elevator up, but they're only taking the stairs down. And so it definitely feels like this market is being defended right now, right? It looks like it's a little bit punch drunk with again a bullish tone to it. So now you know what's going through my crazy noggin. E-mini S&P is bullish as it staggers higher. We have a rotation target up around the channel highs, right? So you guys are experts on this now, right? Channel rotation, rotate from the low up to the high, down to that low, up to the high, right? So right now, we definitely put the control in the hands of the buyers right now. We'll see what happens tomorrow, obviously. We have that rotation target up at channel highs, which tells us to look for opportunities to buy pullbacks, as well as seller failures along the way. We seem to have broken free of yesterday's range, right, which I talked about before, after buyers tried and failed the highs, right? Remember that we talked about that last night? Wasn't this beautiful from last night's newsletter? What were my exact words? It goes up, give them 2 tries. If they can't do it after 2 tries, right, trying to get that 52.85, sell it back down. Now, that worked flawlessly today. But where we didn't finish the job was right here. The sellers tried twice. The sellers needed to get back to 1900. The sellers tried twice. They failed. And look at the reaction from the bulls, right? Almost as if to shove it right down those throats of those bears. It just jumps, blows right through the moving average, makes a new short-term swing high, and then starts to pull back. This is where the buyers have to hold that pullback, right, so we can go higher. If we don't hold that pullback, then we look for sellers to fail, right, so we can buy on a failure, right? So it's going to go continuation. If continuation doesn't show proof to buy, right, we look for failure. Okay, once we get price going higher, then of course we can look into buying those pullbacks, right, on the way up to that rotation and of course on the way up to that measured move target overhead. All right, guys? So we seem to have broken free of yesterday's trading range. Buyers tried twice. They failed. Sellers also tried twice. They failed. And now, of course, right, we see the elevator kicking back in and price pushing higher. So at this point now, again, like I said, trying to buy pullbacks. If we get proof, we don't just blindly buy pullbacks. We talk about that every day in our trade room, right? We talk about it today. We'll talk about it again tomorrow, right? If we don't get the pullback to trigger for us, then again, knowing it's still bullish, we're looking for sellers to fail so we can buy into their stops. And then again, we have some final targets waiting for us up top. If we happen to push lower here, we've got support waiting for us down at 1900, right? So that will be where if the buyers fail, if you're a bear right now, right? If the buyers fail on that pullback, target down at channel lows, target down at the measured move, right? Target back at the channel low or the range low, and then we're going to look down at that range low. Who was paying attention to last night's newsletter? There's an example right here. What are we doing down at the range low, guys? We're going to give them 2 attempts, right? If they can't get it done, we buy that low, right? And the target's back up at that range high. Don't forget, you don't have to do this alone. Come out and join me tomorrow. We'll be trading this market live in real time. Let's keep moving. From the S&P, we move to the yellow metal gold futures here this evening. The yellow metal is bearish this evening and rotating off the highs of a bear channel, which tells us to keep selling retracements and keep looking for buyers to fail when they try to buy their pullbacks. We have a target down around 1078. This area right down here, we got major support. We get a measured move support, 78.3 down to 77. Okay, there's my major channel. We are rotating off the high of that major channel, and we have a target, of course, down at the low of that channel, right? High down to low, tag your it, up to the high, tag your it, down to the low, tag your it, up to the high, right? And, of course, so on and so forth. Now, today started with a bear spike in channel, right? Today started with a bearish spike and channel down. We've corrected all the way back to the base of that spike and channel. You guys are professionals now, right, at spike and channels. That's why it's so important that you watch the newsletter every evening, because every evening I do a little bit more teaching, right, while we provide those strategies for tomorrow, right? A spike and channel is really, really simple. Spike down, channel out. Usually that correction is going to lead to a break back up to retest the base of that channel. And that's where we are right now, right? Now we're coming off that high after that test. Okay, this also becomes one big A, B, C, and then D, right? The highest part of the spiking channel, the lowest part of the channel, up to the correction, and then back down. Okay, so knowing that now look back on the chart. Spike down, channel out. We correct higher. Look where it corrects to. Right to the base of that channel. Now that becomes A, B, C, D. Right down to our target at 1077. 78.3 is a pretty nasty level of support. So it's probably going to bounce off that 78.3. It may keep cooking through to 77.3, but 78.3 is your most important support level for your target for all you sellers. Now, this is interesting though. We started off with a bear spiking channel, which then turned into a triangle. Now, you guys know about triangles, right? Here's a triangle. Now, what do we know about a triangle? Well, triangles are going to have a bias to it. The direction we are trading when we go into that triangle tells us the direction that we're trading in. Here's a better way to describe it. In this example, we're pushing lower. That lower push, right, that gives me directional bias. We then go into the triangle, right? We chop around inside that triangle. And what you want to remember is you can buy the low and sell the high of that triangle as long as you get to it early. Because the last 1/3 of that triangle starts getting really, really narrow. Now, here's the ideal scenario. The ideal scenario is you wait for a break down. Why down? Because the bearish move going into it. That's a directional bias. You don't take that break down. You wait for it to come back, test that triangle, and then look for a nice solid signal candle. That will tell you now you're free to get short. And then, of course, we look for, just like always, right, that measured move, right, to complete on the way down. Now, what's happened now is the opposite of that, right? So it hasn't really been the ideal. Let's do it again. We got that strong push down, which now, of course, goes into that triangle, right? The trend is down, going into the triangle. We're looking to be a seller. This time around, though, now it breaks up. When it breaks up like that, I want nothing to do with that pullback. What I'm going to do is I'm going to look for the buyers to take the bait, then wait for a nice, strong failure signal candle. And can you guess? Yeah, right? Same thing. A, B, C, D, right? And right back down we go. Bottom line, look for the buyers to fail in this scenario. Now you can see that's exactly where we are right now. Bearish spike down into that triangle, right? You can buy lows, sell highs. Obviously, selling highs is the best plan because it's bearish. And then, of course, we go up. The buyers try to buy that pullback. If they fail, that's where we look to sell it right back down in. All right, guys. Gold looking very bearish right now. Focus on selling retracements as continuations. And don't forget to catch those buyers on the wrong side of the market. All right, guys, now you got a good plan for the yellow metal. Wrapping up here on one of the more challenging markets of the week. No, not because the direction's been challenging. This has actually been a really easy week of trading for the euro. The hard part about the euro futures right now is they just made a tick change. Now it has one more decimal place, and now, of course, it's gone from $12 USD per tick to $6.25. Now, looking at volume for the past 2 days, today's volume was actually lower than yesterday's volume, which tells me to think, kind of leads me to believe that traders didn't know this was happening yesterday. They learned about it yesterday midday, and they didn't trade today. I'm going to say the same thing tonight that I did last night. Be careful on the euro right now. Be careful. It's low volume. This is that kind of new normal. There's going to be a little bit of a balancing going on here. A lot of professional traders trade the euro. And so you can imagine a lot of traders were caught off guard a little bit by that somewhat unexpected change from 12 right to $6.25, 12.50 to 6.25 on the tick value. So like I said last night, I was expecting not to get really the typical volume back until the end of this week, and so I'm going to expect another 24 to 48 hours before we start getting the regular volume. It didn't stop the market from acting correctly, right? Everything seems to be acting perfectly normal right now in the euro, even though volume is relatively light. Right, in last night's newsletter, we talked about this this bear spiking channel down. Right, and we talked about how we were waiting for a test, right, of the high. We got that test early in the session, and just this is exactly what you're looking for, right? Price goes up, okay? You're not going to take that for a continuation setup. You're going to look for it for a failure setup, right? Then, once you get the failure, new lower low, sell the rip, new lower low, sell the rip, right? New lower low, sell the rip, right? That's the way you want to trade this stuff, right? You're not going to get a continuation off the top, right? That's a failure. But once you see it start to really attack those lows, new lower low, sell the retracement, new lower low, sell the retracement, right, and so on and so forth. Now, euro is bearish. Okay, we're rotating lower off the highs of the bear channel, but we expect to see buyers try to hold this pullback. Why? Well, first of all, the euro is trading on low volume this week. Okay, we talked about that. But most importantly here, we have 3 pushes lower. 1, 2, 3. Now, if you want some evidence that there's a lot of validity to the 3 push rule, go look at crude from last night. Right? Remember what happened on crude oil? Last night's newsletter, we talked about this. 3 pushes down. We got that big spike higher and then came all the way back down again. Classic. 3 pushes lower on the euro. We rotate off the low up to that high. This is the chance now. The buyers have to hold this pullback. If the buyers hold this pullback, we'll expect them to try to make a run up to this plethora of resistance areas that are still waiting to be tested right now. Okay? If they can't hold this pullback, okay, look left. If they can't hold this pullback, what do you think we're going to do? If they can't hold this pullback, what are we going to do? We're going to be looking to sell right into their failure, right? Because remember, here we are, channel rotation. Low to high, high to low, low to high. Yep, we're trying to go finish off that rotation back down to those lows. There's no question about who has control right now or what my directional bias is. I'm definitely a bear. The only question I have is will the bulls hold this pullback, send it higher, and then we'll look for the failure? Right? Remember, if they keep holding pullbacks, you don't sell. It's that simple. There's no luck. There's no guessing. There's no magic wands, no pixie dust, there's none of that. We don't need that. We don't need to be the first person into that short. There's plenty of money to go around. It's one of the beautiful things. It's also one of the most difficult parts about trading. Stay patient. You're not going to miss there's going to be plenty more than one apple that falls off this tree. Capiche? So, if they hold the pullback, right, buyers can look carefully up to that high. Right? If they can't hold that pullback, you now know where we're going, right, to finish off that move. Got a really big level, a real strong price magnet down around that 82 to 8100 area, a major unfilled support level at 8070. So my gut tells me we find a way down there. Again, this low volume really is the variable if you're trading those euros tomorrow. All right, guys, we got a great plan for you guys. I look forward to seeing you tomorrow morning at 8 a.m. Eastern Standard Time. We'll open up our trade room for all of our advanced members. If you're not a member and you'd like to register for a free trial, learn more about our strategies, I'll give you a free pass to come out and test drive the trade room as a guest so you can see what we're all about here. And you can see why we are the fastest growing, longest running, we are the most successful trading education website on the planet, period. If you can find somebody else that's been doing it longer than me on the internet, I would love to know, right? Because clearly they're doing something right as well. So join the free trial. You'll learn more with me in 1 week on that free trial than anywhere else on the interwebs. And while you're here, don't forget, we have 3 levels of membership. Our beginner membership lays a great foundation so you know how to start your business correctly. Okay, this is not a hobby. We're not playing games. We're making real money. We're changing real lives. And the beginner's course is going to show you how to do this correctly. Okay, don't build your career on a foundation of junk, right? Don't build it on sand. Build it on a good, firm foundation. That's the beginner's course. The intermediate course will teach you all the technical analysis. Everything I'm using on my newsletter, you're going to learn in my intermediate course. Then the advanced course, we wrap it all together and we teach the strategies. We even go one step further and we trade those strategies exactly as we teach it, right, in real time with exact entries, exact exits, right? And don't forget, we open up our trade room at 8 o'clock Eastern time every single morning, Monday through Friday. I've got someone standing by 24/7, 365 to answer all your questions. My name is Joseph. Now get out of here. Rest up. Enjoy the evening. I'll see you first thing tomorrow morning, okay? Be well out there. Be nice to each other, will ya? And I'll see you guys tomorrow morning, 8 a.m. Eastern time. We open up our trade room, 8 p.m. Eastern time tomorrow night for our nightly newsletter. I'm out of here, guys. Be well out there. Be nice to each other. Adios, amigos. Bye-bye for now.